Hi, this is Joe Shahada from Top Tier Capital. Well, today was a big down day in the markets. Not just a big down day, but a significant down day at that. And I can now say with confidence that this uptrend is over. We are now expecting lower prices moving forward in pretty much all the stock indices. So let's just get right into it. What happened here today was a large precipitous decline in the market pretty much from the open. Now, this chart is the S&P 500 on a 3-minute time frame. This is the futures. And this is Friday's close. You can see we opened higher, and pretty much from there we went lower. We had a little bit of an attempt to do something early on, but it just immediately failed. And these horizontal lines I have on here are the pivot points, and the dotted line in the middle is the pivot point itself. So when we went down, we didn't really use any of these support levels until we got all the way down to support 1, and we kind of bounced between that and the pivot point earlier on in the day. And you're probably thinking, okay, it's going to be one of those days where we just kind of chug around. But no, we broke that level right away. We hit support 2, found a little bit of support there, kind of chugged along sideways, and then we just broke right through it. And you know what happened at the rest of the day there. And we kind of ended right at that support 3 level. So big, strong downward push today throughout the whole day. Every single rally was a fake out just to, you know, tack on more selling pressure. And I also put the VWAP on here to show you that you can use the VWAP two ways. Some people use it as support resistance, but you can also use it as confirmation of trend. If we are below the VWAP, people tend to think that prices should stay lower. If we're above the VWAP, people think the prices should stay higher. So that was pretty much the story today. This dotted line, what is that, orange-yellow line, that is the VWAP itself. The other lines are the standard deviations. And you can see we were glued to that second deviation for, you know, part of these sell-offs. But for the most part, I would say that we were down below this line for the whole day, so the trend was just down. I usually don't use the VWAP early on because it hasn't been, you know, confirmed by any action yet. So, and just to show you another thing, the other day on Friday when we were above the VWAP for the later part of the day, we stayed up there. So anyway, that is S&P 500 on the minute time frame intraday today. Now, why was today so significant? I'll show you on the daily chart here. We have been in this long upward trend channel for a while, and since the beginning of the year, and we had a definitive breakout back here, but we wanted to get absolute confirmation of that because sometimes we can pop right back into that channel. It could have just been an overextension of support. But we tried to go back into it on Friday, but we closed right at it. And then today we actually tried to go into the channel and completely failed. And any failure of this at all would have been, okay, definitive breakout, prices are going lower. But we had a precipitous downtrend today, a big decline. And yeah, we are now definitely not in an uptrend anymore. So I definitely expect lower prices in all the indices going forward. For this one, there might be some support right around 1460-ish area because this was kind of choppy before. But we'll have to see what happens there. I expect the entire uptrend to be erased, so I wouldn't be surprised to see prices at 1440 in the intermediate term. So be watchful for that if you are, you know, cautious, or definitely be cautious moving forward if you're long or short, because this is when volatility tends to creep in. To the upside, the resistance is almost just as non-existent as the support. So, yeah, maybe 1520-ish for the upside resistance. Not much. So, yeah, that is the daily on that one. Let's move to the Dow. Similar situation in the Dow. We had an uptrend going on. We broke out of it kind of sideways. Then we were in this sideways channel, and today we broke out below that sideways channel. So when we have two confirmations in a row like that, that's lower prices. Oh, by the way, I forgot to point out back here, we had, when we were up here at these levels, we had the RSI pointing to massively oversold conditions. And I have an RSI strategy that I use for this exact scenario, and I will put a link in the description or maybe somewhere on this video you can click on, maybe in the corner over there. So now let's go to the Russell. Russell's got the same situation going on. Massive uptrend, breakout, retest, failure. So we are definitely going lower on that one as well. Once again, I like to see prices way back down to the beginning of the rally itself. So maybe 850 on that one. Same thing with the Dow, by the way. Dow should correct all the way down to I'd say, where was that, 13.2. Maybe expect some resistance at this level-ish, at 13.550. So that's that one. And now let's go to the NASDAQ. Okay, the NASDAQ was in this sideways channel for a while. We had a fake breakout to the upside, and then we went right back into the channel, chopped around for a day, and then today was a really choppy day. And we ended up lower, obviously, and now we're below the channel. Now we had a failed breakout to the upside, so we could have a failed breakout to the downside, but I think we're going to go lower because we have Apple's controlled by, or the NASDAQ is controlled by Apple. So today and all these other days, we've had Apple just get crushed. And if Apple continues its downtrend along with the other stock indices, I think the NASDAQ will just follow suit. So anyway, that's our analysis for today. I want to make sure you keep a clear head out there. This is not the time to panic. You know what you need to do to tackle these markets, so don't let your head get in the way. So again, you can find a lot of analysis at toptiercapital.com. We update throughout the week there. So thank you for watching and happy trading.